But as promised, let's now turn the conversation towards the auto sector. You've heard a lot of our technical experts say that perhaps autos would offer a good opportunity right now. We've got Abhishek Gao-Shinde joining in from Sharekhan by BNP Paribas. Abhishek, good to have you on. You know, a lot of the auto sales data, the more intricate analysis, that was completely overshadowed by all the election madness. So I just want to start there, actually, because what we saw in the month gone by, the month of May, is that there's a tapering off in a lot of the passenger vehicle, names. There was either a flat or a, degrowth sort of a trend in most of the names, including, I think, a Maruti, whereas CVs were looking slightly better off. Let's start with some of the passenger vehicle names like an M&M and a Maruti, and what's your take there?
See, in contrast to that, what I believe that the numbers reported by the most of the OEMs in the both the month in April and May have been decent, given that it was expected that quarter one would be a slow quarter or a weak quarter as election season is going on, and because of the heat wave and this Nautapa and lack of any festive season or a marriage season. It was expected to be a muted kind of a quarter, but in contrast to that, most of the consumer players like you said the PVs or the two-wheelers have reported decent numbers, and along with that it has also been right that the inventories have been increasing in the PV segments, and now you can see that the PV players are coming on the mode to stimulate the demands in last few days that Maruti has reduced the prices by 5,000 in the automatic gear segment, and second, it has introduced few limited range of products in the entry level segment with the price tag of rupees 4,99,000. So OEMs are taking the benefit of this weak period to stimulate the demand, and we believe that once the marriage season would start, likely to be from the July onwards, as that there was no Vivah Muhurat in the month of May, and there was only one Muhurat in the month of June. So there would be 8 Vivah Muhurat in the month of July. So what we believe that the retail sales would start picking up from July because of the marriage season, and in the two-wheeler case, we may see along with the marriage season, the opening of the school and colleges would kick in the demand in the coming period. So whatever we are seeing currently is an inventory buildup, and retail sales would be visible with a lag.
Okay, Abhishek, just specifically on Maruti, since you mentioned that, I mean, their local sales were up by about 3-4%. Exports dipped quite a bit. I mean, is this just a one-off, an inventory issue maybe, or would you read anything into it, this 30% drop in Maruti's exports?
Now again, there is a contrast that the performance of the two-wheeler segment was driven by the export, and you are mentioning that the export was a little bit weak in the case of a Maruti. But in the case of a Maruti, it's a difference in the timing of the shipment that happens. So month-on-month change in the direction of month-on-month change in the quantum of the export is not a big concern or kind of a thing which we have to note, especially for Maruti. It may make up in the coming quarters because it's a kind of a long-term kind of a contract it has with its overseas distributor partners.
Okay, all right. Hi, Abhishek. Morning and good to see you. I wanted to ask you about Mahindra and Mahindra. You know, if I look at an outperformer of the last 1 year, that stock has close to doubled. Large cap name, I think it's the outperformer from the Nifty as well as from the Nifty Auto Index. What's your view on it at around 2,700 rupees per share? Is the good news in the price, or do you believe there's more to come?
It's right that the larger part of the positives have already been factored in. But what is positive happening with the M&M is the completely change in its automotive business, given that it was expected that the tractor cycle may see a kind of a slowdown in this current year. But what is happening that is the automotive segment has been now on the driver's seat, which was earlier completely it was dependent on the tractor segment only. But now the automotive sector is contributing a higher share in the EBITDA. Plus, in the case of the PV segment, whatever been expecting for the PV cycle is PV sector is a 5-6% kind of a growth in FY25. But what we believe that the M&M may outperform the PV segment in this particular year because of the increase in the capacity. And second is that it has a very strong kind of a order book. So roughly, I think excluding 3XO, it has around 2 lakh units, 220,000 kind of a order book, and with this 50,000 kind of order book, roughly you have a 270,000 kind of order book. So both the things are in its favor. So we believe that in PV segment it may outperform the overall industry. Plus, in the tractor also, it has a pan-India presence and in-house financing arm. So considering these two facts, we believe that even though in last quarter it has lost some kind of a market share, we believe that in FY25 it may recoup the market share, and EBITDA margin trend what it has been reporting appears
Right.
to be quite sustainable. So this,
Okay.
considering this, we are positive on MN.
Positive on M&M. Finally, Abhishek, tell us what you think about CVs, because the numbers look very interesting after a long time. Double-digit CV growth by Ashok Leyland. I think even Eicher's CV performance was good, 10% if I have the right numbers. So Tata Motors CV business was a little more flat. What is happening? Is this just a flash in the pan, or is this telling us that perhaps there's recovery ahead in CV?
In CV segment, it was quite expected that the quarter one would be relatively weak because of this election season. As we have seen in the October-November period also, when there was a state election, the CV segment see a kind of a slowdown. So that is the more in line with the estimate. But what is now going forward, we are looking for a recovery from quarter two onwards, and we believe that the H2 FY25 would be better than that of H1 FY25. Plus, what we are looking more in the CV player is the margin plays, that most of these players are now reporting double-digit kind of a margin. So we believe that even in the case of a slowdown in the volumes or a flat to or marginal growth kind of a scenario, most of these players would sustain their EBITDA margin, and that is the more important thing to drive earnings and to sustain the valuation. So we are more concerned on the margin side than that of the volumes, which we believe that would come over the period because of the aging population would drive the replacement cycle, and the macros would take care about the structural play in the CV sector.
Okay, all right. Abhishek, appreciate you joining in. Thanks a lot for joining and giving us your take on a couple of those stocks. Well, it's